Welcome back. In today's video, we're going to be talking about the Internet Computer Protocol has finally been vindicated. Vindicated for what? Well, stick around and you will see. We're also going to be talking about their number one competitor in the crypto space, which is the Near Protocol. We're going to be talking about Ethereum shakeups, potential reckoning next cycle. One Bitcoin mining company is warning about 2028 and what it means for these Bitcoin mining companies. But before we go there, let's start here with Standard Charter still sees Bitcoin hitting $500,000 despite the recent sell-off. Now, if you've been watching my videos, you know kind of my viewpoint on this situation. The recent market sell-off is just what exactly that, a market sell-off. There's really nothing behind it. I mean, in the 7-day chart, you can see Bitcoin has only come down about 13 or 14%. This is really not massive volatility in crypto. I mean, last cycle, we saw 40, 50, 60% drops in a day. And so everybody freaking out about this doesn't really make that much sense in my view. But this Standard Charter, which is a financial institution in the US, they're bullish. Crypto analyst still sees the price hitting $500,000, even after a month of sell-offs. The head of digital asset research at Standard Chartered told CNBC he believes that Bitcoin will hit $200,000 this year before climbing even further in the coming years. He said within the crypto ecosystem, what we need are traditional financial players like BlackRock, Standard Chartered, and others that have ETFs now to really step in. He said as the industry becomes more institutionalized, it should be safer. He added that this should result with fewer negative headlines, such as the recent hack of the Bybit exchange. The increase in crypto adoption by institutions, coupled with some regulatory clarity in the US, should lead to less volatility over time. And I completely agree with him on that. I definitely think the volatility, like we just talked about, like last cycle, it was 40% drops. The cycle before that, it was 70% drops, literally in a day or two. And we're seeing less and less of that as we see more and more of the ETFs getting involved and other big institutional players, because the big institutional players are the ones controlling the market, as we have covered. If you haven't seen my videos on the recent market drop, go to my channel and look at those. And while you're there, don't forget to hit subscribe and also give the video a free thumbs up. And if you want to help support the channel, click the join button down below to learn more about becoming a channel member right here on YouTube, or you can also use the super chat button down below in the comments. Thanks to everybody who is a channel member and everybody who supports the Cryptoviser. So yeah, I mean, we are seeing less and less volatility. We see massive purchases from MSTR, from MicroStrategy. We've seen purchases of Ethereum from the Bybit exchange to recoup their loans. And meanwhile, the prices are going down. But if we go look at the ETFs are controlling the market because those players are buying and the ETF players are selling billions and billions of dollars, literally over the course of a few days. So to get to $200,000, right, this cycle, this year, I do think it's possible, right? Remember, my thesis last year in 2024 was that the peak of the market would be around 250 at the highest, right? $250,000 Bitcoin. People are like, Cryptoviser, this is too low, this is too low. And I actually stand by that number and probably would adjust it lower, because the ETF issuers, they already bought the Bitcoin, right? MicroStrategy, they already have 500,000 Bitcoin. I don't see a catalyst that's going to be bigger than the ETFs for this cycle. Now, granted, there could be one that we just don't see. There could be just a speculative move. There just could be a drain on the liquidity from the selling side that pushes the price up. There's so many different things that could occur that we can't foresee, and therefore we can't fully understand, how it's going to affect the market. But to get to $200,000 from where we are, it's basically a 2.5x, right? 160, and then boom, 40,000 more, and we are at $200,000. I definitely think it's possible. But I do think that the higher in the $100,000 range we go, if we even go there, we may not. I think that the speculative moves to the upside are going to be just that, speculative moves to the upside, because the smart money is going to start selling. That's my view on it. Anyway, moving on, we're now also hearing not just about a $500,000 price in 2028, but Bitcoin mining companies drawing power from electric grids will face a reckoning post next halving. This is according to Marathon Digital, the largest Bitcoin mining company in the United States by hash rate, and also I think by amount of Bitcoin they own. I think they have about 50 or 40,000 Bitcoin. So a very large amount. Anyway, they just came out with their recent earnings results, and during this, they were talking about different issues and potential risks in the future. He says that Bitcoin miners are still drawing electricity from the grid-attached power sources, will struggle after the next halving event in 2028, according to what he said in a shareholder letter. He said, for those miners still relying on grid-attached power, the writing is on the wall. Energy costs will only rise. The 2028 halving will likely force another industry-wide reckoning. Many may not survive. And this is what we saw during the previous cycle, right? We saw a lot of, in 2021, a lot of these Bitcoin mining companies, what they were doing was they were buying Bitcoin mining machines. They were pre ordering them and prepaying for them at the height of the market, right? So they were overpaying, they were prepaying, and they weren't going to get them delivered until 2022, which ended up being the bear market. And so when they got these delivered, all these machines delivered, number one, the price of the machines had significantly gone down because they were not in demand anymore. Number two, electricity costs went up because of many geopolitical and geoeconomic factors. And so running those same machines in the bear market was less profitable because the price of Bitcoin was lower. The energy was more expensive. And now they had all of these extra machines that basically they couldn't turn on because of all these different factors. Now, what's important to understand is a lot of these Bitcoin mining companies, they ended up selling their Bitcoin at the bottom of the market or very close to the bottom of the market. What they should have been doing in the bull market was selling the Bitcoin, and then all the Bitcoin they mine in a bear market, they just hodl. That's not what they were doing. And so we saw mining company, bankruptcy, bankruptcy, bankruptcy. Or they were taking delivery of these mining machines and then they were immediately reselling them for half the price. So they took a huge loss. None of them were prepared, it seems, right? And so I said during this last bear market, I hope that these Bitcoin mining companies are like preparing. And this is why we're also seeing a shift and a pivot into the AI world and the high power compute world. That way they can make money in other areas during bear markets. Anyway, this statement comes as the mining industry has already been struggling to stay profitable following the recent halving event that saw Bitcoin cut the rewards in half. Many then diversifying into the high power compute and AI space, which we were just talking about. So Marathon Digital said that as such a competitive market, miners would need to differentiate themselves or they would risk falling behind and struggling to stay profitable. He said those that fail to differentiate will be relegated to being price takers in an increasingly competitive market, meaning they're just going to be bought up by these other companies because they're not going to be able to compete. And that is a big situation and issue with Bitcoin, because if you really think about the Bitcoin mining space, right? By the time you order new mining machines and hook them up and power them on, they're already old. And so then you have new machines that are being bought by another Bitcoin mining company that essentially those new mining machines are more powerful than yours. And then they buy those and then somebody else creates an even more powerful one. So it's not like they can just keep the same Bitcoin mining machines forever. They have to constantly upgrade because they have to constantly stay on top of the market, the network kind of difficulty increasing. And so there's a lot of people who say like, you can only make money from Bitcoin mining. Once you become an effective Bitcoin mining company or just individual Bitcoin miner, you're going to be good. But at the end of the day, that's not true because you have to constantly upgrade your equipment. And so you may make, one block for 3 Bitcoin, which is worth $300,000, but how much are you paying in electricity? How much are you paying to get new equipment? How often are you actually mining a block? Like all those questions have to come up, right? So the miner solution, which it claims Marathon to have already taken as an early lead, is to secure low-cost energy, vertically integrate their operations, and expand beyond the traditional Bitcoin mining business, alluding to the fact that they need to cater to other computing needs like AI. He said our ability to acquire sites and generate low-cost energy, activate depreciated hardware and energy assets, and run vertically integrated model from software and hardware and now to energy generation will provide us greater control over costs. And so we'll see. I mean, it's definitely an interesting topic and definitely something that I've told you guys, like, in my view, the Bitcoin mining companies, these are trades, especially during the bull market, because we don't know if they're going to be able to make it into the bear market and if they're going to make it past the bear market. That's a big situation. And people are going all in. Same thing with MicroStrategy. People are going all in on their portfolio. And it's like, why don't you just go all in Bitcoin? Like, if you believe in MicroStrategy's theory and thesis and strategy, essentially. Why not just buy the Bitcoin yourself? Because you're not paying the premium and having all of the debt risk associated with MicroStrategy. Anyway, moving right along and showing you that they are continuing to integrate crypto and digital payments into pretty much everything. Flexa launches tap to pay crypto transactions, introducing the first NFC based hardware wallet payments for retail. Now, a lot of people don't know about Flexa, but it's really important that you guys do understand. They work a lot at a very high level, kind of like Visa or MasterCard behind the scenes on the payments network. And so, a lot of these places that you go in where you can just scan a QR code or just tap to pay, this is all backend integrations with all of these different networks, all of these different payment processors and payment providers and banks and all of that. And Flexa has been working since the previous cycle, at least. I think I started covering them on this channel in like 2019, maybe 2020. And basically, AMP is one of the cryptos behind it. Number one, Flexa is also backed by Gemini Crypto Exchange, the Winklevoss twins. So that's another thing to keep in mind. But if you look at the AMP cryptocurrency, number 139, I think it's actually called Ampera. So yeah, if you see on the AMP coin market cap page, it says AMP is an open source decentralized protocol that provides collateral as a service. AMP is described as the new digital token collateral token offering instant verifiable assurances. For any kind of value transfer using AMP, networks like Flexa can quickly and irreversibly secure transactions for a wide variety of asset related use cases. This project, launched in 2020, so yeah, I was right about that, aims to provide a fast, efficient, and secure transaction platform. It claims to solve a number of network problems, including slow confirmation times, price volatility, and broad adoption. And so this is one of the coins that I have been kind of maintaining an eye on, because I do know that AMP is effectively empowering the Flexa network. And the Flexa network is already integrated, like we talked about. You can see from the launch in 2021, it went up to about just under 10 cents from, I mean, basically 1 penny. And now we've been basically below that. We're in the hundredths of a penny. And so there's definitely potential here, especially if Flexa continues to grow. So let's understand a little bit more about this tap to pay. So Flexa, the leading provider of pure digital payments, is introducing tap-to-pay support for crypto transactions, becoming the first digital currency acceptance platform to enable direct payments via NFC hardware wallets. This marks a major step in digital asset usability. Launching with support from wallets like Burner, this system enables users to sign and transmit crypto transactions directly at the point of sale. These wallet functions, like contactless payment cards, but securely process blockchain transactions instead of traditional credit and debit payments. According to the co founder of Flexa, he said Flexa is resolutely dedicated to making payments or making paying with digital currency easier, safer, and faster than using a credit or debit card by enabling the first NFC based crypto payment directly from hardware wallets. We're providing a better, more instant way to spend digital assets on the go. Users will have to enter a PIN on the Flexa enabled point of sale device and tap their card to sign a transaction, which is processed on the blockchain to authorize the payment. This provides a seamless experience comparable to tapping a traditional credit or debit card, with the added security and decentralization of crypto. Initially, the feature will be available to users on supported hardware wallets and at merchants using Flex's point of sale app or iPhone and Android devices. And then obviously they're going to expand it later on. Very interesting, because we haven't really heard that much from either AMP, the coin, or Flexa, the network, in quite a while. But this kind of just shows that they are still working. They have been working on a lot of these higher end integrations of this digital asset ecosystem. And again, the Winklevoss twins are behind this. And from what I hear, SEC just dropped their case against Gemini as well. And, I believe Gemini is looking to potentially go public on the stock market this year or next year. That will be very interesting as well. Now to our headline story. Internet Computer has now been vindicated. Now, one of the things that we covered a lot last year, till we kind of took a break on this channel, was that Internet Computer is the only blockchain out here, the only one, the only network out here that is actually processing and developing AI related ecosystem use cases that are currently live. And last year, when we were talking about this and we were showing demos from Dominic, the founder of Dfinity, which is the development arm behind Internet Computer, One of the things that we were showing was that a lot of the classification or categories on websites that track all of the metrics for these blockchains, they were not listing Internet Computer as an AI coin, right? They were listing every other coin, right, out there as an AI coin, but they didn't list Internet Computer. And one of my calls to this was hopefully that they change this, right? Maybe it's the Internet Computer or Dfinity team, contact Coin Market Cap, but it's really more of an education piece, right? People have to understand that Internet Computer is the AI crypto. It is the AI crypto because they have actual live AI compute on this blockchain or on this ecosystem or network, whatever you want to call it. And really, what Internet Computer wants to be is the world computer. And to be the world computer, they need to be able to process high compute information like AI technology. And so they are developing this. But before, it wasn't listed. And now, Internet Computer, if you go to CoinMarketCap and many of the other sites and you click on the AI section, the number two coin right here is Internet Computer, which brings us to the next point. Why is Internet Computer the number two um, AI token? I don't know why it's the number two AI token. Well, Near Protocol is listed as the number one. And so, understanding a little bit more about the Near Protocol, let's understand what the Near Protocol is because I know that there was a lot of hype around Near Protocol in 2024, but it says Near Protocol is a layer one that was designed as a community run cloud computing platform and that eliminates some of the limitations that have been bogging down competing blockchains, such as low transaction speeds and throughput and poor interoperability. This provides ideal environment for dApps that create developer and user-friendly platforms. For instance, Near uses human-readable account names, unlike cryptographic wallet addresses common to Ethereum. Near also introduces unique solutions to scaling problems that has consensus mechanisms called Doom Slug. Okay, what does that any of that have to do with high power compute or community run cloud computing? But essentially, I guess you could kind of say the categories would be the same for Near Protocol and Internet Computer Protocol. But again, this leads me to the question: why does Near Protocol have a higher market cap than Internet Computer when Near is a brand new chain? Let's see how many of the coins are actually released. It looks like pretty much all of them are actually released, which is good. Internet Computer still has some emissions as well. But again, if we look at the data, if we look at the actual ecosystem participation, one of the things that I didn't see on the Internet Computer dashboard was active users, daily active users. That makes me a little bit nervous, unless I'm looking at something wrong here. But not seeing daily active users on here would probably tell me that usage is fairly low. But then if you actually look at the trust in the network, right? 44% of the entire supply of Internet Computer is currently staked. And most of it is staked for a very long time, right? More than a few years here. And you can see those numbers on this chart that I have up on the screen. And so there is obviously a lot of usage in Internet Computer and a lot of belief and trust in the ecosystem, a lot of development going on. I see ICP hubs around the world that are building and people coding and building businesses and different applications for their use cases. I did a video the other day called "Is Internet Computer Right for Me? Is ICP right for me?" Definitely go check it out on my channel, where we really talk about from an investing perspective: is Internet Computer a good coin? But I do think that people understood over the last year or so. Oh, actually, it's less than a year that Internet Computer is a main contender in terms of the AI space and high power compute for the blockchain perspective. And so, when I look at the account activity on Near Protocol, because I said, okay, I kind of understand where the Internet Computer Protocol is, but let's understand a little bit more about Near Protocol. And what you can see here is on Near Protocol, 3.35 billion transactions. And if we go to the Internet Computer Protocol number of transactions, where are we? ICP transactions. I would imagine this is total transactions forever. Yes. So they have 20 million. Seems very low, especially when we see the blocks going this fast. So again, I don't know if these numbers are just different. Some protocols identify different metrics differently. I'm not really sure. Or maybe Near Protocol is just very high number of transactions. I mean, 3.35 billion. I mean, who is actually using Near Protocol? I heard about it last year with potential NVIDIA connection, but since then we haven't heard anything from the Near Protocol, right? And so if we look here at Near's unique account chart, you can see here accounts per day. Uh, can we zoom in? Yes. So this is in February. Accounts per day, 500,000. And that was a drop from 800,000. So we have anywhere from 500,000 to 800,000 accounts, unique accounts, right? Individual accounts that are interacting with the Near blockchain on a daily basis. To me, this seems extremely high, right? Are these bots? Are these automations? Are these smart contracts executing? Like, I don't know, but this seems extremely high for a network, in my view, that no, I don't think many people use it. And that's just my own assessment, right? Where are these numbers coming from? So this could be a reason that we see Internet Computer as the number two, because possibly Near Protocol's metrics are elevated or inflated. Maybe they're not. Maybe that's just my assumption is wrong, but that's what it looks like to me. But either way, Internet Computer, as we've discussed in my previous videos, they are building AI within the within the blockchain space. And to do this, it's very complicated. There's a lot of technology behind. There's a lot of infrastructure that needs to be built. And what I've seen over the last few years from Internet Computer Protocol, and by the way, yes, I hold some ICP, but not a large portion of my portfolio is ICP, right? I mean, previously, we've traded it quite a few times on this channel, buying low, selling high. I think it was 2023. The low in September was like $2.90, and we were talking about that on the channel, and it went all the way up to I think $10 or $12 by January. So within a 4-month period, we had a 4 or 5x. I mean, these were great numbers, and this was before all the AI releases that Dominic and Dfinity pushed out. And so we can see that the node operations around the world continues to grow. The blockchain has continued to operate flawlessly. We have the only AI applications built on Internet Computer in the crypto space, even artificial super intelligence, which everybody is, hot and bothered by. Oh, this is going to be the best AI coin. And they merged a year ago and have done nothing since. Nobody has heard anything about them. So listen, when I look at these top AI coins, the ones that I think will succeed over the longer term, I do believe Internet Computer. If Near Protocol does have this kind of connection with NVIDIA, probably them as well. I think BitTensor, I don't know about that. Filecoin, I think, is in a very good position because they have built a lot of infrastructure over the last few years. Last cycle, the price of this coin was way higher than it is today. And the Filecoin ecosystem is effectively similar. It's like a cloud computing as well, cloud storage as well. And so maybe they're just going to be making that pivot into HPC and AI as well. Render, we know that Apple is using Render as well. And Render is for graphics, for AI, image generation, and all of that. Very high level. I do think that Render is going to do extremely well. Other than those, everything else is just a conversation, guys, because we haven't heard anything of real value, real world use cases, or real production of anything outside of those major coins. And so this is where I'm focusing in AI on this channel. We're going to continue to kind of listen. Maybe it'll change. Maybe Internet Computer will be outpaced by BitTensor. That's possible, right? But I promise you guys, we will cover it right here on the channel. Anyway, moving on, Ethereum Foundation reveals a leadership shakeup following criticism. Every few years, Ethereum has shakeups and criticism about everything. Anyway, a new executive director of the Ethereum Foundation will be assuming the new role as president of the Switzerland-based nonprofit, according to what she wrote in a blog post. In her new role, she wrote that she'll continue supporting the Ethereum Foundation's institutional partners, where she served as an executive director since 2018. She said, "I'm feeling deeply grateful and enthusiastic for what's ahead. Recent events have given me the opportunity to reflect on what really matters." The announcement comes as Ethereum has faced mounting criticism that the network is losing ground to rival blockchains like Solana. Don't really think they have to worry about that anymore after the meme coin situation. And Ethereum leadership has effectively become ineffective and too hands-off in its support of builders. Calls for the foundation to replace the former director, Intensified, and co-founder Vitalik Buterin, hinted at changes in the top position for months. So, yeah, will this change anything in the short term? Probably not. I mean, Ethereum's ecosystem is still, for the most part, decentralized, right? They're talking about financial financial support, I would imagine, for the builders who are building the mission critical stuff, not just fun or business applications, the mission critical stuff for the network. And so we'll see kind of what happens with that and how that kind of rolls out. I do think that Ethereum is in a great opportunity and a great position right now because Solana is going, I think, going to continue to drain out as the meme coin situation continues to unfold. Remember, there's still a lot of money at hand here, right? Hundreds of millions of dollars, maybe even billions of dollars. And if we start to see custody being taken of these coins, they may convert them to stable coins. They may convert them to other ecosystems outside of the Solana ecosystem. And by the way, once people actually realize that these meme coins, because the meme coins are still trading, when people actually realize these have no value and that cycle is effectively over, because keep in mind, the cycles don't just, there's no light switch. We talked about this during the previous cycle. There's no light switch one day that you're just like, oh, we're in a bear market, right? It's a transition period where you're transitioning from bear market to bull market. And in those moves, right, you can be going down and then you can go up, right? So if you're buying on the downslope and then it goes up, yeah, you could still be making money, or you could be shorting and still making money, right? But it's kind of like a staircase to the upside and a staircase to the downside. Sometimes the stairs are much longer than the previous one, but it's a staircase down. And so I do think that the meme coin ecosystem is still kind of fighting, but most of these coins are going to be down 99.9%, probably before the end of the year. Let's put it that way. And so is this really going to do anything for Solana? Yeah, it's going to continue to drain a lot of the value out of Solana. And the billionaires who are in at Solana for 25 cents, they're going to be moving it now to Ethereum and the Ethereum-based ecosystems. And then those will pump, and probably some of the Ethereum-based meme coins will pump as well. And then there'll be a collapse over there, and then people are going to move into another coin. What coin that will be after that, I'll keep you guys updated on this channel as soon as we have an inclination of what that is. Anyway, I'd love to hear your feedback on what we covered today. Let me know what you think down below of this video. Don't forget to give the video a thumbs up, hit that subscribe button. If you want to help support, click the join button, and I'll see you when I see you. Crypto on.